world of information out here, but I did want to focus on something in particular here, the Vital Quote comparison in the center of the screen. This is where you can run all of the term insurance providers that are available for WFG to sell. So I would say that anybody who is looking for term insurance, do not call our sales desk, do not email them. You can run this at your own leisure, and literally once you run it once or twice, I mean, you're practically an expert, and it takes you 10 seconds to put the information in. So you would click on Vital Quote comparison. It takes you to a basic data entry page that looks like this. So you just put the basic client biographical information in. And then at the bottom of the same web page, I just split this into 2 slides. There's a little drop-down box for view quick links. You click on that. And then in this particular scenario, I think we're looking at like 20 and 30-year term. So I went in and added years level best. And then that generates a PDF. And then you get literally all of the carriers through Crump that you can sell on the term platform. And
Not to cut you off, I just was amazed, and I hope you guys picked that up. There were 100, for that scenario that Seth was showing, there were 106 products and companies to choose from. That was amazing.
Right. Yeah. And it's such an easy tool to utilize. And what I like to tell advisors is, like, look, you can take this sheet, show it to your client via email, or once you're able to visit people again, you can slide this across the table and say, look, Mr. and Mrs. Client, look at all the work that I've done for you, the research. You don't have to tell them that it took you 20 seconds to run. They don't need to know that, right? This is just, this is the way of doing your due diligence. And quite frankly, it's a time saver, because this takes you hardly any effort to get this spreadsheet done. And on the backside is the rest of the 30-year term. So this is one PDF on these 2 slides. I'm looking at a male age 45, $1 million death benefit, annual premiums for 20 and 30 years. But what I like is, and I ran preferred non-tobacco, so it shows you that rate class, which is going to be this premium here. And then you can also see what it is monthly. But then it's going to show you the next class down for that carrier. So if they don't get preferred, you come back standard plus for, say, John Hancock, who was the first in this scenario. That's the difference in premium. It's a couple $100 more per year. So this is an awesome tool. Don't ever call the sales support for term quotes. We can certainly do that for you, but you're waiting, an hour or 2 hours to get back something that takes you 30 seconds of your time. So highly recommend doing that. But let's just avoid anybody trying to do like annotations and stuff, just for the sake of the presentation. We can come back and answer any questions on that. So I'm going to respectfully decline requests to share right now. But this is an awesome tool. And that's going to really segue into the next part, is the high net worth foreign national programs. And I just quickly want to break it down, because we have a lot of carriers and a lot of options for this. And again, this is a presentation where I could, talk for an hour just on the foreign national market. But I want to talk about 2 parts. One, for folks who are living in the U.S. currently on a visa, or maybe on an inactive visa, but they live here and pay taxes. And then we're going to focus on high net worth foreign nationals. So the first is Global Atlantic. We do a lot with them, and this is going to be in regards to the high net worth foreign nationals. So it's reserved for folks with 2 million worldly net worth, making 100,000 annual income or more. We sell a lot with Global Atlantic, in particular, a lot with the Chinese, Asian countries, the Pacific region. They still are currently accepting Chinese residents. So if they live in China, they'll take those high net worth clients today. There's not many carriers out there that are still doing that from Chinese clients. But really why we're seeing a lot is one, their products are very competitive. But what they've done is they've added living benefit riders to B or better countries. China falls into the B category, which means preferred non-tobacco or better. But you can get, for a international client, you can have chronic, critical, and terminal illness riders on those policies. And you can submit those claims internationally. So from my understanding, they're the only carrier that, one, allows that on international clients to have those type of riders, and to be able to submit those accelerated claims internationally. That's a huge selling point, and when that's really why we're seeing a huge uptick from World Financial Group selling Global Atlantic over the last year and a half, is because of that benefit that they've added. I should note the rider is not approved in California. I understand there may be some folks on the line from California. The Department of Insurance has not approved that rider yet, but we've been advised by Global that they will retroactively add those to any in-force policies once that's approved. So Global is really who we're seeing for the true high net worth clients that are living in a foreign country. But you do have to have a tie to the U.S. You can't just, come here for the purpose of buying insurance just because you have a lot of money. But that's not something I really want to dive into just because there's so many different nuances of that. However, I do want to talk about Lincoln's foreign national program, and I don't know if Taylor has any slides on it or not, but Lincoln is very good for folks who may be here on an L1 or H1 visa. They're working here in the U.S. and they're living here in the U.S. currently. The reason why they're awesome is because the first bullet point is they do not have a minimum income or net worth requirement. For a foreign national program, that is awesome. They also don't require a minimum stay in the U.S. either. So if you have folks who, are on those L1, H1 type benefit visas, probably one of the easiest carriers through the foreign national programs because of how they don't have that minimum income or net worth. If your client only has $700,000 net worth and they have an L1 visa and they're working here, they're probably a good candidate for Lincoln's program. I did include the stuff for them so you would have that, but I do not really want to dive into that. But they do have a lot of interesting updates in the Latin American markets that they've done over the last couple of years. So Preferred Plus in the countries that you see. So I know for the folks in Florida, I think this is a very prevalent topic, right? And what Lincoln does that's awesome is if they do require medical records, and in their medical records are in Spanish, Lincoln will translate those for free, as long as a formal application has been submitted. They also have a lot of great pieces in Spanish as well. And the last one on the foreign national space is Prudential. And really, this is reserved for people who are living in the U.S. permanently, 6 months or more throughout the year, and they intend to do so moving forward, looking back at least 1 year. Even if they are on an expired visa, if the client has an ITIN number only, and they're paying U.S. taxes and willing to provide proof of paying U.S. taxes, Prudential will underwrite them as a permanent resident, which would mean they're a domestic case. So there's no net worth or income requirement. They'll get whatever financially justified death benefit that's available to them. So I always use this example. You may come across a client who, they came here on a valid visitor visa 10 years ago. It expired. However, that individual chose to start a life here. They got a job, a family, what have you, and they pay U.S. taxes and are willing to show proof of it. Prudential will write those clients as domestic cases, which do not fall under the foreign national program. So they're a little bit different just because Prudential looks at where you physically reside. They don't really care about visa types per se. So that's definitely an outlier in that particular spot. The last thing for me is the accelerated underwriting platform. This, for obvious reasons, COVID-19 has us talking through WebExes and Zoom meetings and such. So the world is a little bit different for the time being. However, there are a lot of great solutions with many different carriers out there that allow you to offer just as competitive products, but you can do it all electronically. You can do it without, non-medical type situations. And Crump can support you guys with many fantastic solutions with those programs. So I think before you touch that is we really got to look at, before we dive into accelerated underwriting, you got to look at traditional underwriting. And what is that? That's probably what most on the call are accustomed to. You meet a prospect, you go out and you face-to-face meeting, or you do it over the phone, and you take a life insurance application, you find a product you like, you submit that into Crump or one of your carriers, And then the carrier reviews that and says, hey, you know what? We need to order medical exams. So, an examiner comes out to their home. They take the blood, urine, etc. They run the lab results, and then Lincoln decides whether or not, and I'm using Lincoln for obvious reasons, Lincoln's going to decide whether or not, do we need to order medical records or not, right? This is a very, it's not conducive to your time as an insurance advisor, right? It's very invasive. Obviously, getting a needle stuck in your arm is invasive. Going through your medical history is, it's an invasive process. This is traditional underwriting, right? Well, as of 2 months ago, the insurance industry and pretty much the whole country has been flipped on its head from an operating standpoint. And traditional life underwriting isn't even available in a lot of states. Like where Taylor and I are calling from, Pennsylvania, it's illegal for an insurance agent to go out to someone's house to solicit business right now. Examiners aren't allowed to go out to take exams for blood tests and urine tests, etc. So what's a better option is accelerated underwriting. And essentially what this is it's just a streamlined process to efficiently process your client's life insurance application in a much more timely manner, right? So we have many carriers that can go up to as high as $3 million in death benefit, standard or better rates up to age 60 with their entire term and permanent portfolio, right? And what the carriers are doing is they're looking at the Part 2 medical questions that any insurance application would have. Most of them are completed via telephone. Some are done over, a website where the client can answer them on their own. But the carrier is taking those medical questions, health history type questions, and they're combining big database checks. So they're looking at Medical Information Bureau, prescription database checks, NVR reports, and electronic record searches. And they're compiling that information, and they're making a smart, accelerated decision on whether or not they can make an offer on that client. So the first part I say is this is for your healthy clients. Typically preferreds are better. But with most of the carriers, you got to get at least standard or better to go through this non-med program. But clients are loving it for 3 reasons, really. One is the potential lab-free underwriting. As I talked about, the traditional life underwriting is very invasive. It's uncomfortable. This is a way to streamline that process. The simplicity of it, so knocking out medical records. I don't know if anybody on the line has ever submitted a case on a healthy client where the carrier required medical records just to double check to be sure. And that to get that APS medical record, it took weeks, if not months, just to get it for the carrier to review and say, yep, client's healthy, preferred rates, there you go. This can bypass medical records as well, which drastically increases the cycle time for these life insurance policies. And lastly, most importantly, it's the same pricing as traditional underwriting. It's not like you're getting a watered-down version of their term product or their IUL. You're getting the same product, and if your client gets preferred best, they get preferred best, even if they're bypassing non-medical. If they get standard, great. You can accept the standard rate. Now, most of them, if you get table rated or not, most of them, if you get table rated or not, I'm sorry, I just clicked accept on the annotation. I did not mean to do that. Bear with me here one moment. All right. Table rating will kick you out to traditional underwriting, which would require labs and exams. So why do I talk about this is because this allows you, an advisor, to stay current, to offer solutions for your clients today, right? If you can't go out and see your clients through the traditional route, these programs are a great fix in the interim. And quite frankly, once you get comfortable doing these type of accelerated underwriting options that are available, it really makes sense to do that moving forward for your healthy clients, because really the only thing you can control as an insurance advisor is time, right? That is the only variable that you can control. You can't control COVID-19. You can't control a client's health. You cannot control a carrier not accepting the offer, not accepting an approval for your client. But what you can control is your time. And if there's a smarter, more efficient way to do business, it's almost foolish not to look at these type of programs. And a quick snapshot of are the options that you have available for healthy clients. And as you can see, Lincoln is on there up to $1 million across their entire term and permanent portfolio. But there's many solutions throughout, and a couple of them do go up to $3 million in death benefit. So for the low end face amounts, $100K, some go as low as $50K, the whole way up to $3 million in some scenarios. Non-medical, getting the same product that is available through traditional underwriting. Okay. Again, can't stress this enough. These are typically reserved for healthy clients. Again, you typically got to get standard or better. There's a couple where you have to get preferred. I'm looking at Allianz at the top there. You got to get preferred for them. But everybody else is typically standard or better. And there are pre-existing conditions that could potentially knock your clients out, like diabetes, hepatitis, build issues, etc. Those will kick your clients out of the non-med program, except for one. And this one is not on the screen because their program's a little bit different. But to do these programs, let me jump back just to this screen. Sorry about that. I meant to add it on another slide, but Transaction Center, right? This is going to take you directly to the eApp platform where you can submit accelerated underwriting cases on our website. Let me just jump ahead. Sorry for the time lapse there. And it takes you to this screen. So this is the Transaction Center. You would go up into the upper right-hand corner, start a new app, click the drop ticket button, which takes you to the next screen, and you're going to put in basic carrier and product information. I was just doing this for a New York office the other day, so this was the screenshot that I did. But when you come down to the options to do eApp or drop ticket, you want to select drop ticket. That is the non-medical accelerated platform where you're just going to put basic client information in, and then it's going to trigger that telephone interview or the e-interview that the client could complete online, depending on the carrier. Awesome programs to utilize. This, for obvious reasons, is very popular inside of World Financial Group right now. Everybody's looking for options to support their clients with in this tough, challenging environment, and this allows you guys to stay active. So fantastic tool to have. Now, I've been talking about healthy options only. So AIG is the one carrier that looks at it slightly differently. On their accumulation IUL only, they have a non-medical program at the parameters that you see in the screen, ages 0 to 50, 50,000 to $1 under 500K. But where they're doing things a little bit differently, they'll give you preferred best, which is their top rate if you qualify for it, and they'll do the whole way to table E as in Edward. So they're the only carrier out there that will give substandard rates. Now, it is only on one carrier. It is on lower ages and lower face amounts. But for unhealthy clients, you can still service them in this crazy COVID environment, which I think it's just awesome to have another type of product and platform available to you guys. And especially, not everybody is going to be preferred or preferred best. So this is a way to service those clients as well. You can also include chronic illness rider, which is dollar for dollar indemnity style benefit if they're healthy enough to qualify for it. Again, the last part I'm going to talk about before I pass the reins to Taylor is here's the Crump toll-free. Again, I'll email these slides. There's the email for my life, the life illustrations. I thank you guys so much. And Taylor, before I pass it off, I guess I'll just do a quick intro for you. Let me stop sharing mine. So on the line, we also have Taylor Galpin from Lincoln. He is the sales VP for the majority of my territory. Every state except for Florida he handles. So there is another associate counterpart of his who handles Florida. But Taylor is an awesome resource, very knowledgeable on all things Lincoln, and he has a very good understanding of WFG. And by the way, he's partnering just with the Crump WFG team, not anybody else inside of Crump, only working with WFG agents as well. So this is an awesome resource to have you guys to find out where Lincoln competes in the marketplace, where their underwriting is fantastic. And further ado, I'm going to pass it off to Taylor. All right, Taylor, let me slide this down. I'll just make you host here. Give me a second.
Yeah.
All right.
Tough to find me on the list.
I'm trying to find you, man. There's a lot of people on the call. You know what?
I could probably
Here,
take it since I'm right up here.
Yeah, you just want to take it and share it. I think it's open for anybody to do it. Yeah, go ahead. Thank you.
Yeah. Thanks. All right, one moment. All right, can everyone see my screen?
Yes.
Well, thanks again, Seth. I really appreciate it, and I do appreciate the foreign national slides because that is not part of my presentation today, so that was really helpful. As you noticed, my name is Taylor Gelpin, and I am the East Coast SVP with the exception of Florida. I'm really excited to be here today, and probably for the next 20 minutes, I'm going to provide you some insight as to who Lincoln is as a company, our strengths, especially through the purpose of the presentation, which is our underwriting and non-med options, as well as some technical training into our IUL products. I believe today is going to be really helpful and purposeful in realizing why you may want to choose Lincoln in the future. And the second half of today's presentation is on our IUL products, and that's going to be important because now more than ever, our clients really need confidence. And Lincoln can do that. One of my colleagues, Christian, who you're going to meet on the next slide, did a presentation like this for a WFG office out of California. And one of the advisors in that office mentioned that he had clients calling him and thanking him for selling the IUL product. And really, that's what it's all about. It's about the agents. It's about providing safety and upside in times like today when there is so much panic. But before we get into that, let's touch upon who Lincoln is. So like I said, just this year, we built out a team dedicated to WFG. I know Seth touched upon it, but we have partnered with Crump to provide the best possible service for underwriting, new business teams, and the amount of wholesalers that you can reach out to. So ultimately, the best experience possible, pre-sale, during the sale, and post-issue. We have 3 SVPs, myself on the East Coast, Elizabeth Hartsock in the Central Region in Florida, and finally, Christian Rosamondo in the West. We also have an internal wholesaler, Tanner Patterson, who supports all 3 of us. But what else makes Lincoln special? Well, Lincoln's been around for almost 115 years. We've witnessed and weathered challenges from global health outbreaks like today, as well as past events, to things like the Great Depression, World War II, 9/11, and the housing market crash in 2008. We've also been through many financial downturns, and over that time, we've provided families with financial security through the products we offer. We're an A-rated carrier, and this is important because nationally recognized rating agencies routinely assess Lincoln's financial strength and stability. We have an A rating, and that shows our financial strength and solvency to pay out to our clients regardless of what the world is going through. Not only are we financially strong, but Lincoln's consistent. Looking at this chart, you can see that Lincoln is consistently number 1. We've been number 1 9 of the past 10 years for publicly traded insurance companies. As you can see, there are many carriers in the industry, and regardless of the competition, we sit number 1 almost every single year. Well, what does that mean? Well, it goes back to what I said about our partnership with Crump. It's about what we can offer as a company pre-sale, during the sale, and post-issue. To be number 1, we can't just be good at one thing. We have to be good at a lot of things. Because what we do has to resonate with agents and clients in various aspects. Looking at this chart, I think we can all see agents consistently choose Lincoln. And in the next few slides, you're going to see how we're good at our underwriting niches, as well as our ability to offer a diverse product portfolio. So underwriting niches. One of the biggest reasons I believe agents continue to choose Lincoln is that we strive to be a good partner. One of the ways we do this is through our liberal underwriting. There are 2 specific aspects of our underwriting program outside of what Seth spoke about, which is number 4, that I want to make sure to mention to you all. First, we offer non-tobacco rates for those who smoke cigars, pipes, and chew tobacco, as long as the usage is disclosed on the application. And that's really, really important because if you or your client say that you don't use any tobacco products on the application and it shows up in the blood, our underwriters can only assume that that is through a cigarette, and we can't change that on the back end. So if you do smoke a cigar, etc., make sure you note that on the front, and we can work around that. The only thing that will guarantee a tobacco rating is the use of cigarettes, e-cigarettes, and vaping. In fact, you can actually smoke cigars and marijuana and still be eligible for Preferred Plus non-tobacco. Secondly, we offer something called the Table Reduction Program. And we'll shave a substandard rating of 1, 2, or 3 all the way back up to standard non-tobacco with no questions asked on permanent products for clients up to age 65. There's also opportunity for clients age 66 through 70 to be bumped up from Table 2 standard. And this is really good for clients wanting permanent coverage like our IUL, VUL, and GUL, and it's a big difference maker in premium when they have a slight health issue. This could be due to being overweight, having cholesterol or blood pressure issues, really just a multitude of things. But I want you to think of those clients who get a substandard rating, and if you haven't already submitted to Lincoln, it could be a huge win for you and your clients. And then finally, while it's not boxed in, I do want to touch upon what Seth said earlier about our accelerated underwriting program. The Link Express process is a short application that can be done via paperwork or e-app. And what this means that if you have a client ages 18 through 60, including age 60, with a death benefit need of $1 million or below, we can potentially offer that insurance lab free. And this means that if deemed healthy enough, like Seth said, we want to gear towards the healthier of risk classes. But if deemed healthy enough, they can skip all paramed labs and go straight into the underwriting process. And this will typically cut 20% off the time it takes from submission to placement. And if you're interested in seeing a little more about that, you can reach out to Seth or I, and we'll offer you a one-page brochure that covers this topic. Another thing that I do want to mention is that if any of you have a case already pending with Lincoln, we did just change our rule that if you submitted a full app, you can actually send an email to our new business and underwriting team, and we can switch that to the Link Express process with no additional signatures needed. And this is big because, as you know, a lot of clients and paramed exams are getting canceled right now due to COVID. And we can still, if they do the phone interview, then if we can deem them healthy enough, they can skip that paramed exam and go straight back into underwriting, which will push the case along. Because as we know, as Seth mentioned also with APSs, doctors, their priority isn't sending insurance companies APSs right now. It's getting people who are sick healthy, and they don't really have time for much else. So things are getting slowed down and delayed, and this will help speed it up and keep it on course. But none of this would truly matter if we didn't have a competitive product that we could offer your customers. So we offer a broad portfolio of products to choose from that not only provide death benefit protection, but also allow for cash value accumulation. As you can see, we offer a broad portfolio that covers term, fully guaranteed products through our Guaranteed UL and flagship VUL1 for the registered reps who can sell variable policies. And we also have a protection-based IUL that we'll get into more in a moment, as well as accumulation-based IUL and VUL. Please note, these permanent policies include options for many riders, such as a chronic care rider and traditional long-term care riders. But before we move forward into our 2 IUL products, I think it's important to answer the question, why is accumulation distribution features of cash value life insurance such a differentiator? You know, when you really think about it, clients have a lot of options where they can invest their money. The first option is to use pre-tax dollars for tax-deferred contributions such as IRAs, 401ks, simple plans. Although this bucket is funded with pre-tax dollars, there are government-imposed contribution eligibility limitations on how much can be contributed each year. But what happens to that orange tax-deferred bucket when it's time to take distributions during retirement? Well, those tax-deferred assets become taxable. The next bucket is where clients can invest their money, or where clients could invest their money, includes stocks, bonds, mutual funds, etc. And the advantage this red bucket, has over the tax-deferred orange bucket is that there are no government-imposed restrictions on how much can be invested. However, there is one problem with this bucket, and it's that it leaks taxes. So this can be labeled as your taxable bucket. And then there's our final bucket, our third bucket, which can include investment vehicles such as muni bonds, Roth IRAs, and even cash value life insurance. This one is more of a mixed bucket, unintended, of what can be contributed. While there are contribution limits for Roth IRAs, there are not for muni bonds and cash value life insurance. And the main advantage of this bucket is that the distributions can come out income tax free. So this bucket is labeled the tax advantage bucket. So in recap, we have a tax deferred bucket that is funded with pre-tax dollars, has limitation on contribution amount, and the distributions can be taxed. We also have a taxable bucket with no limitation on contributions, but again, leaks taxes and has taxable distributions. And finally, the tax advantage bucket will offer income tax-free. So we just covered how there are a lot of options to choose from when investing money, but out of all of these options, only life insurance can offer tax-deferred growth, along with the opportunity for tax-free distributions, as well as tax-free death benefit paid out to beneficiaries. Cash value insurance can provide all three tax advantage opportunities for our clients. So if this is the case, what product does Lincoln offer that can allow clients to accumulate cash value, take tax-free distributions, and still leave a death benefit for the beneficiaries? Well, as we spoke about before, Lincoln offers two IUL products. The first we'll touch on is the Wealth Preserve IUL. This is a more protection-based IUL product, but if you have a conservative client who needs guaranteed coverage, who also wants the opportunity to accumulate cash value, this can be a good option. So there are several key benefits to this product. First, it can offer a guaranteed death benefit up to 40 years or age 90, whichever comes first, and if funded correctly. It also offers flexibility and opportunity for cash value accumulation with two different indexed accounts, going from conservative to more aggressive. And then finally, it offers the transparency for clients to know how their money is growing while benefiting from the returns in the S&P 500 without actually being invested. But most importantly, this product also offers protection against the downside. Let's take a closer look at that. Now, I already mentioned that we have two indexed options ranging from conservative to more aggressive. The first is so keenly called the Conserve account. This account offers a guaranteed floor of 1% and a current cap of 7.75%. It also includes a guaranteed interest bonus of 35 basis points each and every year starting in the first year. So what this means is that if a client is allocated to the Conserve account, the minimum crediting they would receive on the bottom end is 1.35%, which is an industry leader, and they could receive up to a credit of 8.1% in any given year, assuming the current cap. If you or your client are looking for a higher return potential, we also offer the Plus account. For an additional charge of 2% each year, the client has a higher cap and a guaranteed multiplier each and every year starting in the first year, along with a guaranteed floor of 0%. But let's look a little deeper at what the guaranteed multiplier is and why you would want it. Guaranteed multiplier is a bonus that the policy owners receive anytime the S&P return is positive. So let's look at three scenarios to better understand how multipliers impact crediting. First, let's assume the S&P return hits the cap of 9% in the year. You take that return, multiply it by the guaranteed multiplier of 56%. The amount that you end up with is the bonus in that year. And in this scenario, the bonus is 5.04%. So you have that 5.04% to the capped return of 9%, you get a total crediting of 14.04%. But why wouldn't Lincoln simply put a higher cap on the product rather than incorporating a guaranteed multiplier? Well, let's look at another example. What if the S&P returned 5% this year? Well, that 5% return, along with the guaranteed multiplier, will result in a total crediting of 7.8%. A higher cap in this case would not have helped the client. A higher cap with no multiplier would have instead only allowed the client to receive a 5% return. So these multipliers truly benefit the customer, especially in the years the S&P doesn't return what you had hoped. But what if the S&P return is negative? Well, then we would hit the floor of 0%. And as we know, 0 multiplied by anything is going to be 0. It doesn't matter if our multiplier was 1,000%. But again, the great news is because the Plus account has a 0% floor, the client is never earning less than 0%. But But why is that guaranteed floor of 1 or 0% so important along with guaranteed multipliers? When we look at the historical returns of the S&P 500, we know that they're going to be both ups and downs, meaning the client not only has the opportunity to benefit from the guaranteed multiplier during up years, but they need protection by the guaranteed floor in the down years. In fact, looking at historical numbers from 1951 to 2018, 30% of the time, a 1% or 0% floor would have been a benefit. And as we all know, it's hard to recover from a bad year. For instance, if you lose 30% in any given year, it would take almost 4 consecutive years of a 10% return to get back to the break even. And offering a floor mitigates that need for recovery. But if 30% of the time you needed a floor, that means 70% of the time a multiplier would have benefited the client. Ultimately, it's important to be able to protect your clients from the downturns in the market while giving them the opportunity to take advantage of the upside. So we know that the Wealth Preserve only offers 2 index accounts for protection and growth and was built more towards death benefit protection. What if we want an IUL that will allow us to take advantage of higher growth potential? Well, then we can pivot to the Wealth Accumulate IUL. Wealth Accumulate was truly built for the accumulation marketplace, and this product was one of the main reasons Lincoln saw almost 150% growth in IUL business last year alone. One of the benefits of the Wealth Accumulate is that it offers 4 different indexed accounts, which means clients have the flexibility to allocate amongst 1 or even all 4 of the accounts simultaneously. This product still offers a more conservative account, which again is the Conserve account with that 1% floor, but it also offers 3 additional accounts that provide your clients with increased upside potential for an additional cost, and each of these is going to align with your client's risk profile. For a 2% charge each year in the balance account, it ensures that your client never experiences a crediting loss with a 0% floor and a cap of 9%. It also guarantees that anytime the return is positive, your clients will receive a guaranteed bonus of 55%. So going back to the earlier crediting example, if the S&P index grows 5% in a year, the client will actually receive a 7.75% return because of that guaranteed bonus. For an additional 4% charge, the Perform account provides your client with the same cap and floor of 0% as the balance account, which you'll see in that first box highlighting both the balance and Perform account. And then it also adds a positive performance credit in all given years, which you can see is the variable multiplier range. Now that's what that extra 2% charge buys. And again, anytime the S&P has 2 positive years in a row, that extra multiplier kicks in. But you can always fall back on that guaranteed multiplier of 56%. And then for the greatest upside potential, there's a 6% charge in the Perform Plus account that provides your client the highest cap of the 4 accounts, the same 0% floor, and the same guaranteed bonus of 56%. You want to use this account when you think that the S&P returns are going to be massive. So let's look at how the Wealth Accumulate can help a client accumulate cash value. So meet Humphrey. He's a 50-year-old male at average health. We propose a Lincoln Wealth Accumulate IUL because he has concerns about the market and wants stability through a system of caps and floors. He plans to pay $15,000 annually for the next 15 years, and he wants a policy that will help his cash value grow so he can take tax-free distributions for 20 years during retirement. So in this example, Humphrey chose to allocate 100% of his premium to the Perform account because it provides a good balance between cost and upside potential, providing both that guaranteed multiplier and that non-guaranteed positive performance credit. For an annual premium of $15,000 for 15 years, we were able to illustrate over $25,000 annually in tax-free, non-reportable distributions. In other words, for a total of $225,000 paid in, he was able to receive over $762,000 taken out of the policy tax-free. And if we actually run an IRR calculation on this, on the money in and the money out, we get a cash flow IRR of 6.01%. And if we assume a 24% tax rate, a taxable asset such as a mutual fund would have had to obtain an IRR of 7.91% just to match those tax-free distributions. I think that's a really compelling story. But don't forget, this is a life insurance policy. So Humphrey's beneficiaries also receive a death benefit. If we were to look at a life expectancy, they would receive over $273,000. And that doesn't even calculate into those IRR numbers. Now, you may be saying, Taylor, this sounds too good to be true. And maybe it's because you ran the illustration at the default rate of 5.67%. And I agree. And that's why we also ran a range of returns to see how the design works for Humphrey at different rates. So if you look at this, even at a 3.5% return, the policy not only gives back Humphrey everything he put into the policy, but more, and the policy doesn't lapse, and there's still a death benefit for his beneficiaries. And I think that's a really compelling story when you look at those numbers. Now, I believe it's important to be able to take everything I just showed you and easily communicate it to your client. And there are actually two illustrative tools in our illustrations that I'm going to show you that can help you present this idea. Every Lincoln Wealth Accumulate illustration includes an additional page in the illustration that helps provide customers an understanding of how the Wealth Accumulate can help achieve their financial goals. For designs that show distribution, you'll see an initial premium at the top of the page, which is our initial premiums. On the left side, you'll see the distributions, and on the right side, you'll see the initial death benefit. If the design shows all fixed loans, you'll see this box, which automatically shows the annual fixed loans at several different returns, like we showed earlier, which go all the way down to 3%, or the rate that actually wouldn't allow for distributions anymore. And finally, on the right side, you'll see the assumed net death benefit throughout the lifetime of the policy. Ultimately, we're facing some tough times. There's no way around it. The Lincoln and our economy have faced tough times like this before, and now is the time for confidence. The world is always going to change around us, and I think it's important that we provide our clients with the financial products that can not only protect their money during the tough times, but allow them to take advantage of the growth opportunities. And that's it. That's all I had on my slide. I wanted to make sure we stayed within the time limit. And I think I nailed it right on 1:15.
Very nice. Very nice. Thank you, Taylor. That was awesome. Let's see, Marla. I'll unmute the line here. Maybe we can answer some questions.
Yeah, I think the meeting. I think.
Okay, so the line should be opened up. Marla, on behalf of Taylor and I, we both thank you guys for your time. But I think I do have to leave in a couple minutes, but if we want to ask a couple questions, I'm all ears.
So usually people are good. You don't actually have to unmute everyone. You can unmute everyone. You can just mute everyone. And there you go. Just unmute everyone. And anyone who wants to talk about it, just unmute yourself.
Oh my God.
Yeah. Well, that's I actually just muted everybody because that was going to be insane. Here, hold on one second.
How often that happens?
Yeah, normally what I do is I let them go on a chat. It's interesting because people are outside of their homes and their neighbors are, pounding on the walls or something.
Mowing the grass. Yeah. Hey, so I did mute everybody, and Taylor has the host capabilities. So if it is a Crump specific question and I drop off, just Taylor, if you don't mind noting it, and you and I can catch up later. If you don't know the answer to it.
Thank you, sir.
But yeah. Okay, so if you have a question, just ask it in the chat box. That's the easiest.
Okay, I'll take care of it. We'll just give them 5 more minutes or 2 more minutes and we're good to go. It's asking which products are available in California, Alvin. What's great about it is that I know that our life wholesaler in California is also doing these events, and I could also invite him for you guys in California. Looks like we have a couple of you who jumped in California. Definitely get that from our wholesalers. You saw the information in the beginning of the slide, so they will definitely help you on that one. Okay. Now another thing is that can I run an illustration for IUL on Crump?
Yeah, it depends, quite frankly. The good news about Lincoln, and I think, Taylor, you can go into this, non-contracted agents can run Lincoln on their website. But if you're talking about other carriers inside of Crump, there's a couple where you can. And it also will depend if you've ever done any type of business with Crump or not in the past. So we give all WFG agents 6 months free to quote now. That is an individual carrier quoting platform. It's a third party. It's on the homepage of our website, right around where the vital term portion was that I showed you. And essentially, if you've never signed up for Quote Now, you can go ahead and do that. You'll get 6 months free. If you do not place any business at Crump over that 6 month time frame, whether that's a $10,000 annuity or a $100 term case, it will lock you out of Quote Now until you actually place a piece of business at Crump. And each place case gives you 90 days access. You can bank up to a year's service. We're charged a fee per agent to have access to that, so that's why we slap on that little, stipulation on place business. But you get 6 months free. So if you haven't done that, that's an easy way to do quotes. You could always utilize the sales support team, and then there are a couple carriers where even if you're not appointed, you can go out to their website and run stuff. And I'll let Taylor, touch on that.
We have two big questions here, and one for you, Seth. I mean, is this something where, because I've been spoiled with Crump, where if I have a client, what I do is I call them and I just give them a scenario, and they usually just send me all the options, whether it be term or UL or IUL. Is that still going to be good? Because I know if it's term, I can run it. I've mastered that already. But sometimes the UL option for a little bit older clients have been so far have been better premium than the term and better options.
Right.
So what I've done is I just called the Crump number and they've been giving it to me. Is that still about a good way to do it instead of us trying to do it on our own? Would we just go call Crump?
Yeah, I would recommend reaching out to myself or the sales desk or our internal on the Crump side to run if you're doing a more complex design, definitely, because we're going to run with the most competitive options. So if you're just out there trying to figure out on your own, that's not conducive to your time, quite frankly. Lean on us for that type of support. But if you find a carrier or something and you just want to run one particular option, by all means, go and run it yourself. But otherwise, you'll spend your days just figuring out how to run carrier software when our teams do that already for you.
Yes.
Real quick, I got a question here that I can answer, and then I do have to drop. I apologize. It says for foreigners studying in the U.S. age 17, so they're on an F1 visa. So the only carrier in that particular type of situation would be Prudential, and there's a couple stipulations that would go with that. Because they're a minor, most carriers will not touch that at all. However, if that student studying here is living here permanently, so 6 months or more out of the year, and they intend to do so moving forward, and they intend to stay in the U.S., they could potentially get a policy. However, since they're a minor, the carrier Prudential is going to require the parents to have coverage, and they're going to require the parents to have double the amount of coverage. So that's not just a black or white answer there. There's a lot of variables, but potentially Prudential would do it. And I did see another one, Prudential, do they still accept if they have expired visa or if they are out of status? So yes, if Prudential, again, if the client is living here permanently by their guidelines, which is 6 months or more, going back 1 year, and they intend to stay in the U.S. permanently, 6 months or more each year, moving forward. For the clients who are on expired visas, maybe they have an I-10 only and they're paying U.S. taxes and willing to show proof of that, Prudential can potentially write them as a domestic client. So that would be the only option that I know of with expired visas. But those folks need to be paying U.S. taxes. That's the key. I hope that helps. So I'm going to stop my video and drop off the call, but just in case something quirky happens, I'll leave the meeting open and feel free to just cancel out of it. All right? Thank you, everybody.
Thank you so much for your help. Thank you. And Taylor, the last question is for you. For the 46% charges, what amount does that come out of?
Yeah, I'll get to that really quickly. I did want to add to what Seth was just talking about with the students. Lincoln does require Nexus, even if you don't have a green card. The average age or the needed ages are 18 and above, but Lincoln does age up 6 months prior. So if we are within 6 months of the client's 18th birthday, as long as she's going to a U.S. university and lives full-time in the U.S., does not have to have a green card, that is full Nexus, and we could write the insurance. So that's what I wanted to say about that as well. And there is no the only minimum would be the $100,000 permanent policy.
And Taylor, on that one, can they reach out to you directly on that particular situation?
Yep. So I've talked to Seth about that, and each crump wholesaler will be different. So if you're on the West Coast, or if you're in Florida, or the Central region, the answer may be different. But if you're on the East Coast, Seth is fine with if you have a Lincoln-specific question, you can reach out to me or Canner direct. I can give you my number right now, actually, if everyone has a pen. Direct line is 959-333-5141. And my email is my first name, Taylor, .GALPIN @LFD, so LarryFrankDavid.com. And anytime you have, like I said, Lincoln-specific question, you can call us direct. We're happy to answer those questions. And what we'll do is we'll answer it, and we'll actually loop your crump wholesaler back in so that they know that we've been helping you out.
Taylor, the number again?
Sorry?
Your number again, is it 959?
Yep, 959-333-5141.
I'm sorry, 5141. Okay, there you go. Thank you, Asana. And then the email, we're just putting it on the chat box.
Yep, I can put it right in the chat box right now if you'd like.
Okay, perfect. You keep on saying the wrong numbers. Guys, please disregard what Jet said. Okay.
All right. And I think that should have perfect. All right. Oh, yeah, we put it wrong. So my number is...
All right. Thank you so much. And
You're welcome.
So also your territory. I know you said you don't have Florida, but you have Boston, you have Virginia. I mean, how far do you go up?
I go all the way up. So starting in Georgia, I go all the way up until we hit Canada. So if you think about it, it's everything that Seth covers. So if Seth is your crump wholesaler, I'm your Lincoln wholesaler, with the exception of Florida.
Okay, got it. So same except Florida. All right.
Yeah. So, Louisiana, Kentucky, and West Virginia are my westernmost states. And then going to that 4%, 6% charge question, that money actually comes out of the cash value. So if your first premium payment, let's say we're doing the 4% charge in the Perform account. If your first premium payment is $100, what Lincoln does on the front end is they take that 4%. So $96 goes into your crediting for accumulation. And what that charge buys, whether it's 2, 4, or 6% charge, is it buys that guaranteed multiplier as well as that non-guaranteed potential. So for the 2% charge, it just buys the guaranteed 55% multiplier. It's not actually a profit to Lincoln at all. The 4% charge buys that 56% multiplier, as well as that positive performance credit, which is the 2 consecutive years of positive return, we add an additional amount to that multiplier. And then in the 6% charge, it buys the higher cap, the 56% multiplier, as well as the higher non-guaranteed multiplier. So it does go off of the beginning amount going into your accumulation. So like I said, in year 1, $100 premium, 4% charge goes off the top, so 96 goes in. Well, let's say in year 10, you have $10,000. And that's about to be credited because of all the years of accumulation. You would actually have, instead of that $4 charge, what would it be, a $400 charge coming off the top. So whatever the cash value is at that time that's about to get the crediting for that year, that's where the charge comes from. Does that answer the question?
Yes, definitely. A little bit technical, but I'm glad you talked about that. Also, one more thing, correct me if I'm wrong. There's another question about the F1 visa. So technically, if they're 18 and they're going to be using them, net worth helps out. Wasana, it's definitely the net worth is the one going to be the one that's going to pull it up. Okay. And also,
we don't have that net worth amount at Lincoln. That's one of our big, differentiators. Is if they have a visa, we can look at what kind of visa, and if they have a green card, we don't look at that at all. The green card is the nexus. I did have clients with B1, B2 visas, and we had to look at that a little bit more in detail because they're in the process of getting the green card. But you can always apply to Lincoln for the health class. But at the end of the day, our big nexus requirements are: you have a bank account. If you need nexus, the bank account minimum is $100,000 plus first year premium that's been in the account for a minimum of 90 days. So you can't just put the money in and then say, I want the insurance. It has to have been there for at least 3 months. You have to own either, and that's one reason. That's one way of nexus. The second way is you have a business in the U.S., so you have business purpose to be here. Or number 3 is you own real estate. You have land or an extended rental apartment of a year or more.
Okay, what about income? If you're not going to look at I think the net worth is there when you talk about real estate and stuff. But what about they don't have income, they're here just to work? So it's going to be the bank statement, correct? So what would they put on the income part?
If you have, so that'll be an underwriting portion. So there's no income minimum requirement. But if you say I have, $300,000 in the bank, and they say, what's your income? And you say I make $20,000 a year, they're going to say, well, where did the $300,000 come from? So as long as you have a legitimate reason why you have that amount, that'll be fine. But just anticipate that question if you have a scenario like I just mentioned. But we don't say you have to make $50,000, $100,000, or anything like that going into getting insurance. But we can look at that, your income amount, for what amount of insurance will offer, but not for eligibility for insurance.
It's going to be a case-to-case basis then, more so for F1 visa type clients.
Yeah, it really depends on the age of the client, how much they make, because they do have the financial underwriting guidelines, which tell us what the multiplier could be, and I don't want to go too deep into that because that can be confusing in itself, and we pay underwriters for that part.
Right, okay, we'll just get I think that the confusion here is that F1 visas are student visas, and they're not allowed to work in the country. So I think, I guess you answered it also where you're saying, well, let's show us your bank account that actually you're able to study here and you're able to take care of yourself here with that money.
Yeah, but an F1 visa, are they going to school? They're going to school full-time in the U.S. and they're residing in the U.S., correct?
Yes.
That is nexus in itself, and we don't require that bank account information. So that we don't care about the $100,000 in the bank account. Them going to school in the U.S. and residing full-time in the U.S. is all the nexus we need. That's the only tie that we need, and we can look at them as a potential insured off that alone. There is no bank account or income requirement for that.
Perfect. Wow. Okay. Well, thank you so much, Taylor. Really appreciate you giving us more in-depth information about Lincoln. We normally just send it to Crown and let them figure it out and let them explain it to us. Definitely appreciate that you gave us a better look at Lincoln, and we really appreciate that.
Yeah, and I do have multiple presentations. This one was the one that was tied a little more to what Seth was focused with today. But if you're interested, if any of your offices are interested in getting some more trainings, I do have separate ones. We can talk about those. And while I like partnering with Seth on these, if he's not available, we are allowed to do those presentations without Crump present, even though I like partnering a little more. It's a little more fun for everyone to hear change of voice and such. But hopefully everyone got something from it, and I really appreciate everyone's time today.
Definitely. Thank you so much. And everyone, as I said, the reason why we brought Crump is because back in the day, we have to call all of the 65, 100 companies, and we have to figure it out ourselves. So the great thing about Crump now is that you could get Limken, Prudential, all those carriers, and they would just have to look and do the due diligence for you. So if you are new, the reason why we brought this Crump in is because if you are a new agent, whether you're new and as a 15-year-old veteran like me, it's still easier for somebody who has all the knowledge about all the companies that we can just go to a company called Crump and have them figure out which is the best one for the client. So please get to Crump, have Crump help you. And it's just amazing that Crump could bring somebody like Taylor with Lincoln to give us more information. And that relationship is definitely a very valuable, a part of this. So thank you so much for tuning in, and thank you so much for being flexible into this move. And we hope next time we'll have to go through this again. But Taylor, thank you so much. Really appreciate you. We were talking about what we felt like we were watching Marvel. Between you and Seth, you both look like superheroes. So thank you so much, and you definitely are superheroes that are helping us out. So guys, the bottom line is get Crump. Tell Crump everything. Don't worry about. Some of you are thinking, what if I say this? What if they don't approve? Don't think that way. Always think about what you say and what it's not about trying to go around it. It's all about finding the right thing for the client. So get the information right and give them to Crump, and let's help everyone. Okay? So please don't stay put in your offices, in your homes. People need us right now, and a lot of people need to make some money. So go ahead and make some money. As a matter of fact, I just tripled my income on the paycheck today. So I wanted you to go out there and do that, because right now, more than ever, we are needed. All right? Thank you so much, everyone. Thank you, Taylor. Appreciate you. Bye-bye.
Appreciate it. Again, email me if you want to see the Link Express breakdown. I can send you some brochures as well as our foreign national stuff as well. So thanks, everyone. Have a good day.